Hey folks, today is July the 18th. It's currently 8:52 in the morning. Right now we're in the FX Simplifier trade room, as you guys can see here. And under that, we have our MT4 chart. Right now we're in two trades. We'll excuse me, continue to watch that, see how it does. And obviously these are from the I believe New York session or the New York session. Actually, those might be from the London session because I'm looking up here. See trade alert, nothing there, nothing there, and we have a pending up here. So these are actually from, it looks like the London session. All right, so we'll continue watching. We'll see if we can get any trades in the New York session here. I'm going to turn on the volume now. And I'll let you guys listen in.
Welcome to the webinar. You have entered as an attendee in listen-only mode.
This is slightly delayed data, by the way, probably by about 20 minutes, which is fine for this particular currency pair. Excuse me, this particular index, which is just an amalgam of various currencies against the dollar, weighted heavily with the euro. But at any rate, we see an uptrend in the dollar index on the monthly, pullback, bullish engulfing off of support, and a slow attempt at a rally. I see this continuing. I think most of the team, maybe all of the team, sees this very possibly continuing up to retest these highs. Look at this pattern on the daily where you've got this huge Brexit inflow, and then you've got really this choppy action, but it's pretty constructive. And what do I mean by that? It's constructive because you've got relatively equal highs and you've got rising lows. And whoops, that didn't go right. And rising lows, and what pattern is this? Just in basic technical analysis, you've got an ascending triangle forming in the dollar index where you have equal highs or near equal highs, rising lows. These can break any direction. However, it suggests a push higher or a potential breakout eventually to the upside. So that's what I see there, and so that naturally makes me think, well, dollar, dollar strength is good potential for dollar strength in a lot of pairs. This is why there is an idea out last night for the Swissy USD CHF, a FX team trade alert that has not met entry, but has pulled back and would have to move a little bit higher. Let me just expand that. I'm kind of going here and there as a conversation takes us, but all with the purpose of making markets clearer and showing you potential ideas or pending ideas. In this case, this was issued but hasn't triggered either. USD CHF, you see kind of a similar pattern that we just saw, in fact, on the daily chart of the dollar index. You see on the hourly chart of the Swissy, and that's kind of just coincidence, actually. But what you see is, first of all, what does the red line tell me? The rising 200 period moving average tells me that I'm in an uptrend on this time frame, which is the hourly chart. Okay, so in an uptrend. Secondly, obviously it pulled back, broke through, quick demand, brought it back above the average. Similar thing happened again. Lots of energy back above the averages. And you see since then what's happened. Quieter and quieter sideways consolidation. This also is what I just said. It's an ascending triangle, relatively equal highs and rising lows here. Okay, so I drew that very crudely here. I would redraw that again if it mattered. But you just see the pattern of rising lows, relatively equal highs. This I would look to see break higher. Has to trade above this horizontal line up here, though, to make a multi-day high. That would trigger the FX team alert entry. And obviously, we'd be looking for higher prices in USD CHF, the Swissy. Okay, so that would be part of why did I move to that? Because we were just talking about the dollar index and potential for dollar strength according to the charts. USD CAD is kind of similar, and especially if crude weakens, if that weakens as I would favor, based on our analysis there that we just went through. in the last 20 minutes or so, I would that could help USD CAD. Okay, so dollar strength is something that I wouldn't be surprised to see, and I think we may see. USD against the yen, yet another pair that's been strong against the yen. This we were just kind of looking at. We were just talking about the opposite of this in the currency futures at JY, and now we're seeing again USD yen. I don't have a great inclination to trade this at this moment, because what currencies since Brexit have been what currencies immediately after Brexit, aside from pound weakness, were strong, and it was the yen and the dollar primarily. So they're obviously they trade against each other, and there is movement here. But I prefer to try to look to trade the very strong against the very weak, or short the very weak against the very strong, and so forth. And we're not. You're kind of looking at two big kids on the block with this pair. What are your thoughts on USD yen, just while we're looking at it, Tag?
I really want to be long, but I can't.
So
on a long-term basis,
on a really look at a bigger chart, don't I?
Yeah. Yep. On a monthly or weekly basis, I'm bullish, but then so on the monthly you can see right there on that small monthly even. So you can see we're basically even have the retracements there. So it's a retracement, but it's also right at support, which is like the best types of retracements, right? But so it's at support. I gave back a bunch of that. If you go even bigger, can you make that chart super big?
Yes, and I could add more data if you want.
Don't worry about it. So if we look at it, roughly speaking, if you draw a line actually from that far left over across, it comes about the same place it does anyways. There's some really long-term trend lines in there, which some people don't like them. Some people do. I do. Where you're getting decade-long or multi-decade-long trend lines. But in this case, you have that, and we're basically right there, give or take. So when you're looking at something, that's over a 30-year period, I don't really care if it's within a couple pips. I care if it's basically about right where it's at. And there's two different trend lines that you can draw, and either one of them brings it to about where we're at right now. And sort of this interesting place, but then from a monetary policies perspective, we're really interesting as well. We saw that big pop last week. Last week was actually the biggest week in over 20 years. 1 week. We've obviously had some multi-weeks that were ridiculously good, but last week's move was really, really big on it, which made it that much harder on a daily basis to be buying, because it probably already did all the moves it's going to have for a while, so it should consolidate. So in the idea that it should consolidate, I kind of like it more on as a short, because we had that pullback, and if you do a 50-period moving average, it's pulled back to the 50 multiple times on this downtrend. And so I don't know. It kind of looks like a short to me, but I don't know. I'm conflicted. So sometime in the next 6 months, I'll probably be long yen. It could be in a week or two. Could be 6 months from now, but most likely I'll be long the yen at some point. But right now on the daily, the more I look at it, and I'm honest with myself, I'm like, that looks more like a short. It obviously doesn't look like a long. That thing's extended as crap. But when you're biased, and that's one thing about having biases is learning to manage them, and I've gotten better over the years. I don't know if I'm great or not at it, but I'm aware of them. So where I'm like, I like this on so many levels, but then, you look at it, and the whole thing, price basically doesn't really lie, and it's not super bullish where it's at right now. But a year from now, I bet it's higher. Sorry, I cut you off.
No, that's okay. So and not to just go on and on about this one pair, USD yen. Okay, and I'm just dealing with some alerts in my ears, but it's always for the same pair. By the way, folks, very, very kind of sleepy session so far on a Monday here. However, all these areas of narrowness are potential opportunity. We have a pending idea out in AUD-CAD. It has not triggered. It remains narrow right here. This is a very narrow area, and we're looking for a break higher in this. Which, we'll see if we get. There's been not a lot of movement, a little bit of weakness in the Aussie against the Swissy and yen, so hasn't really infected the CAD yet, so we could see maybe.
All right, folks, we're now at about 10 minutes. I'm going to go ahead and pause it, and I'm going to come back a little bit later. I believe the trade room has a few more hours, so definitely don't want this to be a couple hours recording, so we'll come back a little bit later. We'll see if this pending order gets filled, and we'll just see what happens. Be back with you guys momentarily.
Typically do on these, so it's a buy stop.
All right, guys, just entered a trade.
It's a buy stop market.
AUD CAD.
Once a trade hits that price, we put the buyout, and so we pay the spread, what have you. On occasion, though, if you get really finessey about it, on a pair with a wide spread, if it's a narrow spread, I don't even bother. But on a pair, say you have a pair that has like a 30-point spread, well, and a 30-pip spread, sorry. On there, I might look at like trying to put a limit order in there and trying to buy in anticipation of a breakout because it saves me so much. But if I haven't played with it and figured out how that works, I would not be doing that because I want to get in the trade. So I don't know. There's different things. There's a lot of different uses in learning how your system operates, your different options available to you, and how they trigger. I know initially with a bunch of things, I've been frustrated at different times with why are these fills happening? Why is this happening like that? And then, you make the phone call and you figure out, okay, it's because of this or this. So there's almost always a good answer. You might not love it, but like a fair answer. But if you don't put in the work, you won't know it. So find out how your orders operate. That's the 5-minute version of that.
Very, very important. Yeah, that is not some boilerplate spiel, even though a lot of you have heard that before. Definitely, if you haven't done that yet, please do or consider doing what Tag was just saying. AUD-CAD, you can see, has reversed back from its earlier weakness this hour and has traded up near from this feed up near the buy stop trigger price in forex.com. It did trade at the 0.98410 stop, and so this really just feeds will differ a little bit, but this in forex.com has become an open idea. So that I'll change when I have a moment. In the meantime, EOR NZD, our other pending idea, is perking up a little bit. So I'm going to be again a little bit quieter here as I concentrate on these two of these markets here that we have issued alerts for.
Yeah, and another area you want to learn, and like I said, we'll be doing some lessons here probably pretty soon, here in the next few weeks. I said that a week or two ago, but sometime in the next month or so, we'll have, possibly after the meeting, I guess. We'll see. But we'll have some lessons on how risk works inside of the Simplifier. But really, we'll do some lessons on position sizing, because there's a bunch of things you can do with position sizing. It's a very freeing, liberating tool, because it really expands. It takes most people's trading to like another level when their eyes finally open to position sizing. And position sizing in the most simple form is how big is my position relative to the size of my account, right? Therefore, how much am I risking relative to the size of my account, relative to my track record, things like that. And there's a lot of power in finding what for you is your optimal position sizing. It kind of maximizes your account growth, right? If you're risking too much, then you'll have a few wins, make a bunch, you'll have a few losses, lose a bunch. Maybe you have a couple more losses and you lose it all type thing. If you're not risking enough, that's a better position to be in, because then at least you can't blow up, meaning you can't lose your account, but it also makes it so your account doesn't grow as fast. But then another thing you have to deal with there is your risk tolerance. Some people are really fine with big swings. Some people can't stand even small swings. So, depending on your thing. So that's why I say your optimal position size. And so work on that. But that's something to think about. So when you're doing your trades, right, you can do micro lots, full lots, 10 lots, 1,000 lots, 1 lot, what have you. Figure out on any trade you're putting in, hey, what's my dollar loss relative to my account size, right? So, we put any trade idea we put out, we put the open pip risk, right? And so you times that by whatever your pip's worth on there, you'll know how much am I, to your position size, you'll know how much am I risking money-wise relative to my account. And, some people risk 10% of their account per trade. Some people risk 0.5%. Some people risk 0.25%, what have you, anywhere in between. And we're not here to tell you how much to risk, just to say that this matters and that you want to put some thought into it when you're figuring out your position size.
Yeah, that's definitely something. I mean, we talk about that regularly, or at least not irregularly. And certainly, we don't tell you what to do. That's not what we're here for. However, there are, the 2% number is considered kind of the 1 to 2%. Would you agree with what I'm about to say, Tag? That that as a fixed fraction of one's account, that's kind of that's a classic number, at least for futures traders and stock traders.
0.5% through 2% seems to be the money range depending on your system. It's like everyone and their dog seems to run that one. And what I mean, everybody and their dog, I mean every really successful systematic trading firm seems to use somewhere in that range. The unsuccessful ones are risking a ton more, then they blow up. But yeah, pretty much everyone runs within there because it seems to be a pretty sweet spot. And David Bush has done a ton of it. I've done some of systematic trading, which, essentially what we're saying by that is you figure out your risk management algorithm, and then you figure out entry and an exit strategy. So, buy when this and this happens, sell when this happens, risking X per trade. And that expert trade is a big part on there because if you have a winning system, say it's right, whatever, it's right half the time, but it wins 3 and loses 1 when it's right and wrong, so you do well with that. Well, if you're risking too much, you'll blow that system up. Whereas if you're not risking too much, you'll make lots of money. And so the risk is a really, really, really big part of this. We've obviously mentioned that before, but it's a case. And position sizing is something to really look into. There's not. Strangely, everyone kind of talks about it. I don't know, not everybody, but a fair amount of people talk about it. But there hasn't been a ton written on it. I mean, you can Google it. There's some stuff out there. Some that's pretty good. Some that's total garbage. The best book on that, maybe the only book on that, Trade Your Way to Financial Freedom by Tharp. Cheesy title, actually a really good book, and he shows some different trading styles, anything from like the Buffett long-term hold to some people that are scalping and everything in between, to help them figure out different ways they can do position sizing. That's a pretty worthwhile thing. I'll finish. I have like a half-done presentation on that. I'll finish one. So on a super slow day, we can walk through that and show. But on your simplifier side, and even on the simplifier, if you're trading, you need to figure out what a good position size is for you. And so we haven't done a lesson on that yet. But think about it and play with it. Figure things out like, okay, how much am I risking per trade as a part of my account on a dollar basis, on a percent basis, and kind of go through there and figure out what a good size is for you. Because you're just going, hey, I have X amount in my account. I can risk this much. Oh, well, if you're risking your whole account per trade, you better not need that money at all and not care if that money goes away. You also better like sitting in front of a screen instead of going to Vegas, right? Because what's the difference? If you're risking your account, 100% of your account each trade, you're basically rolling the dice because any given trade, who knows? We know over time we've done well, but I've had streaks that have been bad. David Bush has had streaks that have been bad, what have you. And so if you're risking 100% of your account each trade, that you're definitely risking too much, right? Like he just said a few moments ago, risking 0.5% to 2% seems to be the money spot for successful people long term. But I know some that risk a little bit more that have worked out all right. I don't know anyone that risks 20% a trade that's still around. So I don't know. You could be the exception or whatever, but I don't know one. So I guess that's an idea, something to think about. Because again, we don't tell you how much to risk. We just show you.
All right, guys, lots of good information there. We're currently right around 20 minutes here, getting pretty close to it. So I'm going to come back. What time is it now? It's about 9:30, so I'll come back a little bit later, closer to the end of the trade room, and we'll see what happens around that time. Just a quick update, guys. We got filled, or this one, AUD CAD finally moved into profit.
Where it's finally moving up from, and yet at the same time it was compressed against its 200 period moving average on this 15-minute chart. So just some subtle observations, but wanted to point them out. And that obviously is an open idea. And all
right, be back a bit later. All right, guys, this trade is very close to being hitting our profit target. This is the USD CAD. We are about 3 pips away from hitting it.
Trade idea, E or NZD.
Hopefully we can catch that.
I'm going to cancel trade alert number 2 over here on this left-hand sidebar as well.
Oh, you got to be kidding me. Guys, we were about 4 pips away from hitting it right there. I was going to try to catch it here, but looks like it's backing off a little bit.
I do think that there's some potential there. It's just potential with a pair that's up for days. Okay, so the pop here, if one was to trade it, one would have to be very nimble, which is certainly something we could aim to do. But I'm going to put it more in for those who are interested in this. I think there's still potential, and I'm looking at the lower.
I think there's definitely going to be some resistance right here at this level. As you guys can see, market came up, touched it there, broke it, touched it there. So we're definitely coming back to that level. The market has broken it, so hopefully we won't have any issue actually doing that again. But there could be some resistance at this level. I'm just going to leave it. I'm not going to lower this at all, even though you do have that ability. And right now my instincts are telling me, move this down a little bit, since we know this level is potentially a resistance area. So I'm going to leave it the way it is. I'm going to let the traders, the pros, do what they do, because a lot of times I do get out of trades too early. So I'm just going to let them manage it the way they want to. We'll continue watching it, and we'll see what happens. Hopefully it'll go ahead and give us a nice little pop up here. All right, I was hoping to catch it in a live video here while I was recording, but I might just have to pause it and come back to you guys after it happens. I'll do that, and then I'll just show you in the account history. I don't want to just let this continue to run. I'll be back.
That is now
all right, guys, they just moved the stop to break even on this trade. As you can see, AUD CAD, AUD CAD, stop is right there at break even. We're going to continue watching it. Just wanted to give you guys that quick update here. So this is now a no risk trade. Let's see what happens.
Especially when it's slow, but even when it's not.
Be back momentarily.
We talk a lot about different risk coverage because there's volatility in the meantime.
That's very interesting. I'd love to see more.
All right, guys. It looks like that trade was just taken out. The traders closed it. They didn't wait for it to get up to this level. Let's take a look at what happened here. As you can see, we made $450 profit on that trade. We risked about 35, I believe, to make about 56. So definitely a good risk to reward ratio on that trade. All right, and we're still in a few here. This is our AUD CAD trade. Again, break even. We're currently up about 20 pips right now. And we're also in this NZD USD trade. This is about a 1-to-1 risk to reward. Currently up about 4 pips. So we're going to continue watching them. And I'll be back momentarily to see what happens. All right, guys, another quick update. Let's go over to account history. All right, looks like they decided to go ahead and close out that NZD USD trade. I guess they decided that they didn't have as much confidence in that sell level, or something must have changed to make them jump out of that. Either way, we made $17.91. Not a huge win, but obviously a small win is better than a loss, so we'll take it. And in our final trade, we are still up, and we'll continue to watch this and see what happens here. This is a large profit target of 154, about 155 actually. So we'll see what happens here. Hopefully the market will give us a nice run.
60-minute is still moving higher.
All right, folks, look like something has closed out here. Let's see what happened.
In the room, we're not typically putting on multi-day swing
AUD
trades.
CAD.
Occasionally it'll work out that way, but that's pretty rare. And so we're putting them on as day trades and doing the initial risk reward on a day trading basis, meaning, well, on a daily, you probably would have risked almost the same in that particular instance, but a lot of times, depending on the setup, you'd risk a little bit more one way than another. And so we're risking, what was it? We're risking, was it 10? Whatever, risking X amount of pips, but, pulled out, it looks like we did 19.3. I'm saying that's the official, we're saying obviously depending on how your fill, you may have gone 1 or 2 pips higher or lower. But yeah, could it go higher? One, obviously, it always can go higher. Anything can, right? But as far as the setup goes, yeah, it's a bullish setup. So we're biased to it toward the long side, but we closed it out for the room. So yeah, if you're still in it, I mean, you manage it accordingly. But I like to swing setup on the daily, and David Bush obviously does. He's the one that put the trade out. So yeah, so it probably goes higher, but don't know. It gave us quite a bit pretty quick. So if nothing else, around here it probably consolidates for a while, and that's kind of why it got closed down.
Okay, yeah, I agree with Tag's comments, folks. I updated the sidebar there with Simplifier fills, actually, and yeah, Tag said it correctly, of course, which is that and here are my favorite intraday trades. I mean, my favorite intraday trades and favorite intraday trade setups are what? They are swing setups too. I mean, if you can, and kind of the best of worlds is to find a swing setup, which is this very nice pullback towards support in AUD, CAD, and then look for an intraday base or other setup. This happens to be a sideways base, and that in itself could be a purely intraday trade base. And there's breakout, and boom, there's a trade. It's closed. But is there still a swing here? Absolutely. 1, 2, 3 days down, uptrend. First day up, it appears. I say it appears because we're not closed yet today, right? There's still hours left, and this could make a new low. I don't think that's going to happen, but it could. But anyways, 3 days down, first day up, it appears. This could be the start of a rally in this pair over maybe a couple days, maybe more, right? So that's the best of both worlds, right? When you have the wind at your sails, I mean, it's nice to be.
All right, folks. So 3 nice trades today. The trade room goes until 11 o'clock, but I'm going to go ahead and shut it down. We're currently at 10:18. I'm going to go ahead and get this video done and up on YouTube so I can get it out to you guys. Again, 3 nice trades here. First trade to come out was this nice $450 trade on the USD CAD. Second trade out was this NZD USD for $17.91. And the last trade was this AUD CAD trade that you guys got to see here. They moved the stop up to break even. Initial risk was about 10 pips, and they took about 19 on this particular trade. And that was $182.58, as you guys can see here. So great trading this morning. I'm going to go ahead and shut it down. As I said, if you have any questions, don't hesitate to send them my way. It's best to contact me at EmpireAmbition.com, but you can also post a comment here, and I'll get to it when I can. Also, if you want to get signed up for the FX Simplifier, definitely click the link below. And if you have any questions, again, just send them my way.